TGIF Warriors, everyone ready for the weekend? Also a good time to get ready to at least take our trial. So here we had that big down day in Euro yesterday after Draghi. And I'm viewing this, even though I thought it should have stopped maybe around here, as a shorting opportunity, wrong back over 1380 to 14. So we'll see if that was just a one-day fake breakout. On the week, we've recovered a bit, still lower on the week unless we get a big reversal. Still think there's a pretty good chance for a breakdown. I don't think we'll know until early next week if this was just a false signal or maybe even a higher low before we start to head higher. You'll know back over 114. And for cable bulls, I got a tweet from Amanda, I think it was pound Kiwi. So the pound is starting to not confirm new highs. Your last confirmation really was here. And on this high right here, we have a non-confirmation. And I know a lot of people were looking at 131 as major resistance. The 50-week comes in at 132.30. I'd start to be careful with cable longs, especially if the dollar is more than a one-day fake out. I look at the dollar here, very whippy trade yesterday. To me, I think that we still could get at least another push. Maybe this is drive one, drive two again. Back under 96, this was just news related, aberration, shake out all the bears. But really, to shake out all the bears in the dollar bears, you really need to get above this 97.50 level. So you can see here on the daily that the 50-day is containing it at yesterday's highs. I don't think we're going to have a resolution to whether it was a breakout, fake out until next week. But I'm going with what happened yesterday and then back under yesterday's lows in the dollar. You have to reassess your bullish view, in my opinion. And just to show you, I want to show you something that I got from Amanda. Here it is. So Amanda's talking about this pound Kiwi wedge and talking about a 3 drive. This was yesterday. And if you're not a subscriber, you get to see Amanda, among others, trade live every day in the private member chat. In my opinion, Amanda's a top gun. And to have her input and putting out her ideas with charts in the chat room, I think is a very valuable service that she provides, besides running a pretty tight ship and making sure everyone is respectful to each other while she's in there moderating the room. So the other things I want to cover is the S&Ps here. Although the eclipse did put in a nice little high here over the weekend, there's one thing I didn't like for it to be a top. It's here on the 4-hour. The high that we had last Friday was confirmed. Now, should we make a new high and take out the 75 level, we won't have a confirmation on the 4-hour. So we never got to the top of the range, which is, 2690-ish to 2708. Perhaps that's going to happen sometime next week. To me, that would be a shorting opportunity, especially if we have some divergence and that occurs. Okay, and you would think that the yen, which is acting okay, and you look at the yen here on the 1-hour. Here you have 1, your first drive up here, and here you have 2. And if the S&Ps are going to rally, there could be more left. There's confluence of some moving averages where they kiss each other. It's very romantic moving average. set up here at 1122. Not sure if there's any fib level. I know ways back some people were looking for 112 before the big failure, so very possible this is where we're heading into next week, which would line up with a new recovery high in the S&Ps. So that's my view going into the weekend. Again, I want to thank everyone for hanging out with us during the week, and really it's great to see our trading community grow and the chat room grow. And, our mission is to build up and edify traders every day. We do it also through bringing in, I try and get the best of the best for interviews to also include in your intelligence gathering. So, you don't have to subscribe to anything else but ForexAnalytix because we get all the people here. And it's all, a lot of these guys are part of my intelligence gathering. We have Super Bear Henrik Zeberg with us to wrap up the week on a real high optimistic note. He's a deflationist. Some of its targets will surprise you. And looking forward, I'm going to put Henrik to the test today and ask him what would change his mind, because he's had the same view and conviction about it for a while, and pretty much right on. So stick around for Henrik Zeberg at the top of the hour. Steve will be with us today. And Blake, how are you today, buddy? Are you ready for the weekend? Yes, I think Blake is ready for the weekend.
Oh my God, I'm so ready.
Yeah, thought maybe we were gonna take a 3-dayer.
No, I sit there and when you talk to me, I'm muted.
Oh
and
yeah,
I have to look around my screens and go, where the hell is the mute button? So I have to unmute myself because that's not like I don't have my finger on the trigger because my finger's on.
Yeah,
my
the
platform,
other trigger. Yeah,
yeah,
the other trigger.
my platform is a one click. Like literally, I click it and I own it, or I short it. And it's and I don't trade with small size necessarily. So if something moves, I can click the button and own it like immediately. And so my cursor's always over the trading platform. So when you start talking to me, I'm like, oh crap, where's the unmute button? Because I'm sitting there knowing you're talking to me, and I just couldn't find it. So
yeah, and speaking about clicking, Blake, and I've been there, and I think anyone hearing me right now, if they're approaching the market before they click with this thought in their head, I hope this one works. They need to stop and reassess, and even better than that, become a subscriber, because if you're not going in there challenging the market and making the market challenging, emotionally you're really just set up for failure. So you have to say, okay, Mr. Market, I've done my work, prove me wrong, not, oh, I hope this one works.
Yeah, that's a great point, Dale, and I love that analogy. Hey, I've done my homework here.
Yeah.
You have to prove me wrong at this point. So
yeah,
I love it,
and
that is an attitude, and that's actually the attitude I've been trying to employ this whole year. And I caught myself last week really making some mistakes, and I've corrected them this week, and I've had a great week. I'm not going to lie, I was long the pound, pretty aggressively, and so I did really well with that. I eclipsed what I lost last week, and which has been nice. So
way to go, bro.
Thanks. So I feel good about it because I was at the end of the last week, I was pretty irritated. I'll kind of give you guys a summation of how my month went. So I started off the month with a short position in the New Zealand Canadian, and really traded it on the short side. At the beginning of the month, that little dip right there made almost my entire month. And then last week I got caught shorting.
The Aussie yen spikes.
So the big tape bombs, these two, last Friday and last Thursday. So I mean, you can see them right here. I mean, these are I was trading this channel a little bit differently. I was trading it like this. So you can see, can you see how I drop? Like, you have to imagine this didn't exist. So it was like,
Right.
it looked like that. All right. So, you know, I'm short the Aussie yen aggressively. Stops right above the trend line. Boop, popped right above, stopped me out. Then the next day I did it again. I'm like, okay, that was an anomaly. Shorted again. Boop, tape bomb. You know, that was Mnuchin. Then, you know, stopped me out again. And both of those positions were super aggressive. I say super aggressive because I knew we were going to turn. I knew it was, and you know, and I come back a week later, and here we are a lot lower. You know, 100 pips lower. So frustrating. But I guess the point I'm trying to make here is I plan those trades, but I hastily got back in the second time. More of a revenge trade.
Interesting.
You know, which no one here can admit to me with a straight face that they've never done a revenge trade. So you can't.
I think you even did it a third time, and it worked the third time because I remember you talking about the two prior stop outs, and you weren't in as heavy.
Stop there. No, yeah. And then what I did is it wasn't so much a revenge trade. It was more of it was shorting the Aussie end here, making money here, and it was. But this one right here was a total that shouldn't have stopped me out. I'm getting back in. The trade was right. Then I got, you know, the whack-a-mole hit me. But what was upsetting at the end of last week, and this was last Friday, right here. What was most upsetting about that is that between those two trades, it really zapped my profits that I made earlier in the month. And so, you know, and I'm proud of myself for getting back on this, you know, getting back on the horse, back in the saddle, and taking advantage of the pound on the breakout above 130 because it's been great. Now I'm flat at the moment. I scalped a little bit buying the pound when it was down at 130.70 this morning, sold it at 131, or I sold one right here at 130 like 95 or something. And you know, so I've been and I played the pound Aussie and the pound New Zealand quite aggressively. So which are,
you know, what's interesting to me,
crosses to play. Yeah.
Is that you know, use the word I was irritated. Okay, so irritated is a lot different than some people that really get dejected and really feel, you know, they get into fetal positions. They take their losses very hard emotionally. To be irritated is a very low level of, you know, emotions. It's just like, you know, I get irritated if a fly lands on my shoulder, but I brush it off, right? I brush it off and move on. A lot of people go much deeper into negative emotions after a couple of losing trades.
Yeah, I'm, you know, I guess maybe because I've been,
you're built.
Well, not necessarily. I think it's because I've been doing this so long. I know what I'm good at, and I know when I'm making mistakes, and so I can correct them relatively quickly. And I know I'm very confident in what I do. I'm not confident in everything I do. You should go see me play tennis. I'm like the most unconfident tennis player in the world. You know, but I'm also a great skateboarder, so I'm very confident in my abilities when I'm almost 50 years old and I can still carve around on a skateboard. You know, so wow. It's not based on you know, it's just I'm very confident in my ability to trade and make money. So
That's why you only get irritated.
I only get irritated because it's self-inflicted wounds most of the time, or you know, it's, you know, obviously it was like these spikes. Like I should have learned the first time on the Aussie end. It was it's like, okay, you know, let's move away from that. I was dealing in a very tumultuous trading situation with the China U.S. headlines, crossing the wires all the time. It's like, okay, I'm putting myself in harm's way, and then I'm revenge trading, and it's my own fault. So I basically got up. I really did a lot of self-reflection on Sunday. My wife came in. I'm telling you guys a story just because it's, I'll get into the analysis here in a second, just because we have a few minutes, and this is important. I did some self-reflection on Sunday, and I got up really early in the morning on a Sunday morning. I got up like at 5:30, and I sat there with my cup of coffee in a very quiet home. Everybody's asleep till about 7:30 in the morning. For like 2 hours, I just sat there with a couple cups of coffee, just kind of replaying everything in my mind, saying, okay, what did I do right? What did I do wrong? Let's correct this path that I was on, and I corrected it, and I came out storming this week, getting back to what I had talked about at the beginning of the year. I'm waiting for the trades to set up, and when they set up, I'm going to take advantage of them, and that's why I've been really solely focused on the cable, because as I've told you guys the last week, that a breakout above or last 2 weeks, a breakout above 130 was going to be bullish. So from Wednesday to today, I've made hay while the sun has been shining, and that's what you got to do as a trader. You got to go, this is the move I was waiting for. It's happening now. How did I plan on taking advantage of it? It was already pre-planned. I knew I was gonna, and you guys, I don't know. I have to go back and listen to the week ahead video from last week, but I'm pretty sure I told you guys. I'm 99% sure I told you on the week ahead video on Sunday of last week. If the pound breaks 130, if the cable breaks 130, if the sterling breaks 130, I'm going to be long pound pairs, period. And I bought the pound Aussie, pound New Zealand, and I bought the pound US dollar, the sterling dollar, and I made money. So that's it. How many of you guys listened to the week ahead video last week? How many of you guys listening? And I'm looking at the Q&A panel right now. How many of you guys listened to the week ahead video? Steve did. Jack did. Alex said every week. Bob said Bob did. Alejandro did. Dominic, thank you. And Chad did I say that on the cable on the week ahead video? Just confirming. Yeah, everybody says yes. I did, and that's what and so the point is, I'm not looking for, oh, Blake, hey, congratulations, you're a rock star, or you did a great job, or I'm not looking for that. What I'm trying to confirm with you guys is this was all premeditated. That's the point I'm trying to make. It's not. I'm not looking for a congratulation. I hope you guys made money, and I'm not sitting here looking for that affirmation. What I'm looking for is, what I'm trying to explain to you is, I planned that and I did it as planned, and that's the important part. And look, I plan things and I do it all the time, and they don't always work out. They don't. Obviously, like the Aussie yen was a great example of last week. But I guess going all the way back to the beginning of the year, the point I'm trying to make here is that I'm trying to make more effort as a trader to better myself in my timing aspect and my planning aspect of what I do, and that's what I've where I've fallen short this last year. Let me and I know you guys are probably like, we have no data coming out today, so I got plenty of time to go over charts. So don't think I'm ignoring the charts and ignoring what's happening here, because believe it or not, I'm actually pretty bullish the euro while we're above 113. But I'll talk about that here in a few minutes. One of the things that was I did again, this self-reflection like at the end of the year, and I'm going to tell you a little bit about how my office, the guys at Gelos Capital trade. Okay, I'm gonna give you some insights on how these big traders trade. when a news here, let me give you an example here. So when a news story comes across Bloomberg, you see these like news stories. I'll see this news story before you see it on Twitter, because when somebody gets it on Twitter, they do this, because you can't just copy paste this. Okay, so when you're on Twitter, I'm going to show you the power of Bloomberg. This article comes out, I click it, then I come over here and I copy it, and then I go to Twitter, and then I paste it, and then I hit go. By the time I've done all that, you're talking about an elapsed time of maybe about 10 seconds. Right? Are you guys with me thus far? 10 seconds. Do you know what can happen in 10 seconds in the markets, in currencies?
Everything.
Everything. The euro could have been up and down 40 pips within 10 seconds. Okay? So the guys and gals in my office, they're what I call reactive. So they see a headline. Now they trade too. They're technical. They look at macro, and they're biased. They'll go, hey, I'm bullish the euro dollar for X, Y, and Z reason, or I'm bearish the Canadian for X, Y, and Z reason. And then they look at all the charts. They read all the research. And I'm telling you, these guys are pros. I mean, these guys have been, I'm explaining to you how like these professionals of 20 and 30 years trade. They are absorbing 12 hours worth of reading material throughout the course of the day, every single day. Oh crap, I just bought some pound Aussie on a dip. Oh, that's good. Okay, I don't know if that's good or not, but I just acquired some. I had a bid in there. I totally forgot.
Oh crap, I got filled.
No, I'll show you the reason why. But I had a bid out there, and no, this is a bid to buy.
Yeah.
But anyway,
you forgot to cancel an order?
Well, no, I left it out there because it was up against this trend line. And that's,
yeah, okay.
But now we're kind of cracking a little bit. But anyway, I'll have to watch it carefully. But these guys will sit here and they'll look at the news, and the news will hit. And by the time you read it on Twitter, they're probably in and out. So let's say, Donald Trump approves spending bill, right? I'm just going to say dollar yen rips up 50 pips. They have probably bought and sold the dollar yen once, maybe 2 or 3 times by the time you read it on Twitter with size. So they may have gotten in and out with huge size. Okay. Does that make sense, everybody?
Yep.
Okay. Now, do you know what kind of person I am? I'm not reactive. I'm methodical. Do you know how I know that? Have you met those whip smart people where they have a comeback for everything? They just, do you know those people, Dale?
Yeah, I used to be one.
Okay, you used to be one. You're kind of a slower thinker now. But you know those people that they'll say something
I keep my mouth shut more often. I've learned you don't have to say everything you think.
Well, but you know what? Those people, they'll say something and they can whip out a response immediately, and it's like, oh my God, they're those people.
Yeah.
They're you have friends and family members, I'm sure, that are those real quick-witted, very fast thinkers. I am the exact opposite of that. And I always have been. You can say something and I'll look at you and go, huh. And then like a minute later I'll go, oh, I should have said that. That's the kind of guy I am. I'm not a reactive. I'm not a reactive thinker. I'm a methodical thinker. So I plan things out. And so last year I spent my entire year trying to be more of a reactive trader based on, something would happen. I'd press the button, and it worked for the most part a little bit. I'm sure I could get better, but what I did realize, Dale, is I'm better at methodically plotting out what I'm going to do and then taking advantage of it.
And I think most people are.
I think most people are too. I don't think that's uncommon at all. I think that it's probably more common than you think, that most of us are better at methodically, thinking out why we're buying something in a certain area, looking at the stop, looking at our limit, looking at risk reward, understanding the macro drivers behind the move, yada, 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 and then getting in the trade. And so for me, what I've been really trying to focus on this year is becoming better at that methodically planning my trades, because that's always been my bread and butter in the markets. So I tried to it's like I try to put myself this round peg in a square box, and it's just not working as well as it could be. So I've retooled my approach to the market to being more of methodically plotting out what I'm going to do in the markets and then taking advantage of it, and less reactive. And I'm not saying that I don't react, because when a news headline hits, and by the time you see me tweet it out or put it in the chat room, it's already 5 seconds to 10 seconds have already passed. I've already, probably, taken advantage of it if I thought it was important enough to, because bottom line is I'm trying to make money just like everybody else. So I see something and I'm gonna jump on it. But most of the headlines, are only good for 10 or 20 pips now, and unless it's something that's really significant that is going to move the market hundreds of pips, which there are like 3 main topics right now and 3 main drivers that can move the market hundreds of pips, but we're not seeing it at this moment. Anyway, all right, so I just wanted to kind of go over that. Hopefully it made a little sense to you guys, and so let's talk about what we're seeing here. So first of all, the euro dollar. So the euro, if you guys haven't seen, we have a big long trend line spawning back from 2016 all the way through the lows of 2018 to where we were at yesterday. We were below it, closed slightly below it, and here we are bouncing. So I think the risk is, while we trade above this 113 level, you don't want to be short. You just don't. I think that while we're above 113, you want to be more of a, there we go, something like that. So you don't want to be on the short side, and I think this is at risk of squeezing some people out, personally. Harabjeen says, I've never seen a successful trader paying attention to news. That's because you're not paying attention to the right people. I mean,
he probably means, Blake, retail traders.
Oh yeah.
Successful trading the news.
Oh no, because you're always behind the curve.
Exactly.
You have to have a Bloomberg or Reuters streaming news. I mean, look, for Bloomberg, I paid $2,800 a month out of my own pocket for this. $2,800 a month to get. I'm showing you the streaming news part of it. What I'm not showing you is, all the rest of it. What I'm not showing you is all the rest of Bloomberg that you don't see. Okay, which you probably see now. Okay.
Yeah, got it.
Yeah. So, but if you're trading news, you have to be piped in directly to the news source. Because if you're trading news on Twitter, you're gonna get crushed. You're gonna get crushed. All the algos and all the big boys and gals, they've gotten in and out before you can even flicker. So. So anyway, that's it. Okay. So anyway, let me go back over to what I was talking about here. So as far as the euro goes, I'm not trading the euro. What I am thinking though is pretty much this. If we cross 114, I'm going to start getting bullish. And I don't think that's going to happen today. There's no real reason for that to be, above there today. I'm just pointing it out that
you're prepping yourself. See, you're that's methodical.
It is. For me, it's more of a. I think if we get above 114, then this is going to be all a pivot off of a very long-term trend line, and we're back up at channel highs, which takes us to 115.
And that's what, the 50-day coming in there around the same area, Blake? Is that a 50-day moving?
No, this is the 48 exponential moving average, made popular by the Captain Ron.
Oh, okay.
Yeah.
Yeah.
So
all right.
I keep the 48 exponential moving average because I use it intraday on the 1 hour and the 4 hour typically. This is the VWAP actually, which I should remove.
Do you know why Cap came up with that number? Did he ever tell you why 48?
I think it was more of a, why can't I get rid of the VWAP? I want to remove that. Anyway, no, he's had explanations. He's had a lot of explanations on why. I never caught it.
It works for you. That's all that matters.
Well, yeah, and it works for a lot of people. It's like it's one of those things that I kind of keep on and pay attention to kind of intraday. Right. It's not my do or die thing, but it is something that catches my attention. Let's talk a little bit. Oh, I know we talked a little bit about the euro. Let's talk about the cable some, because obviously the pound, technically, and I've told you guys this, I don't care if, as long as it's above 130, I don't care now. I don't care. You can tell me the news is this and that and the other thing. I don't care. It's squeezing. It's squeezing, and it's squeezing a lot of shorts. The market's, you know, very poorly positioned in the cable, and I'm assuming it still is. And so yeah, I'm sure you've seen a little bit of moderation in shorts, but guess what? The pendulum swings both ways. Not only do you have a market that's extremely short, but the market that can turn extremely bullish. So you have a pendulum that can swing a full 180, and whether we've swung 90 degrees back or maybe only 70 degrees back, we could still swing all the way the other direction, which could put a real big bid in the cable as people get bullish based on whatever the reasons why they're getting bullish. So I've come to the conclusion with the cable is, as long as we're above 130, I'm buying. So and there's a news story about the DUP, and by the way, we are above the 200-day moving average, about the DUP secretly supporting the Theresa May's Brexit plan, whatever. And it's probably a lot of hubbub. But you know, whenever these articles come around, and you can say the same thing about the U.S. and what's happening between U.S. and China and negotiations, and you know, there's a lot of hearsay and rumor mills, and look, there's probably some validity to all this. And look at the euro; it's really firm right now. There's probably some validity to what's happening behind the scenes. We are getting close to, look at the euro just popping. We're getting close to a deadline, and we're getting close to crunch time, and where something has to get done, and I'm sure there is a lot happening behind the scenes. So to just blatantly say that it's not done until it's done or anything like that, look, I'm not buying it. While it's above 130, price action is very bullish, and there are people acquiring the pound, whether it's because of short covering, whether it's position squaring, whether it's straight up getting long the cable. I don't know. But as long as we stay above 130, 129.80, you couldn't pay me money to be on the short side of the pound right now. So I am buying dips, and I'm buying dips, you know, in different pairs. So, and again, you know, we get below 130, and then my tune will probably change. But from right now until we get to the mid 130s, there's no way you can make me short it. And if we close the week above the 200-day moving average, that would be a little scary if I was on the short side. I'm just trying to think, being in the other person's shoes. One last thing that I want to mention before I turn it over to Steve is the dollar yen's at 110. I shorted it last night. I shorted it at 67 or 69, closed it at 67, or I shorted at 67, closed it at 64, something like that. I only made like a couple pips. It basically covered my commissions, because I do pay commissions. So I have to make more than 2 pips on a trade because my commissions are pretty they're big, you know, when you're trading big size. So I have to take all that into consideration. But what I'm trying to point out here is that I tried shorting the dollar yen. I didn't like it. I didn't like the way that it was that it was trading. And I'll tell you what, if you're on the short side of the dollar yen, I cannot. I personally don't want to be on the short side until we start making some lower lows here. And right now we're still making higher lows, and we're brushing right up against 110 again. And frankly, you know, if we come up with a Brexit plan, if we come up with a China deal, trade deal, if the government reopens, you know, throw a couple of reasons why the dollar yen could very easily be back above 110 again and start squeezing again. So I'm a little nervous about being short the dollar yen until I see reasons to, meaning I need to start seeing us trade into lower lows versus higher lows and higher highs. So I want to see lower lows and lower highs until I, you know, and at that point I might start shorting the dollar yen again. All right, and
Get a
with
wedge on the chart of the day
go ahead.
yesterday was the yen.
Yeah. The
A
chart of the
wedge.
day.
Yeah,
It was a
that wasn't complete yet. It was U.S. dollar yen rising wedge that didn't look complete yet.
It's not, and it's still not, and it may you know trade up to 111 before it reverses. You know, it quite possibly could. So, anyway,
great luck.
Thanks. All right, and Dom said the dollar CAD is also dropping. Yeah, and the dollar Canadian it's coming into flag support, and look, that's evident of risk on. I mean, when the dollar Canadian is rolling over like that, that's telling us that, you know, stocks are pretty well bid. I'd be careful being short the S&P right now, because like I said, Brexit, China US trade deal, government reopening. One of those three things, you know, we could have a 50-point rally in the S&P really quick if something comes to some sort of resolution here. But anyway, guys, I hope you enjoyed the time here with me. I'm going to turn over to my colleague Steve. Steve, good morning.
Hey, mate, I'm going to grab the screen myself for the reasons I explained before, okay? Okay.
Yep.
Good morning. How are you, mate?
Have a great weekend, Blake.
Hey, thank you. And I want to say, if you guys haven't visited Forest Park FX, Steve will show you how to do that. They are our partners. If you guys look, if you're not part of the ForexAnalytix family, but you would still like to support what we do, go use the reimbursement program. Maybe you can get ForexAnalytix for free. But go through Forest Park FX, and their contact information is right there, because that they are the reason why we can provide you with this free webinar every day. So thanks everybody for listening in, and thank you, and have a great, wonderful weekend. And I'll see you guys on the week ahead video this weekend.
You too, Blake.
Good hunting, buddy.
Thanks, gentlemen. Bye-bye.
Oh, hiya, Steve. How are you, buddy? So you're you're the producer, director, and now analyst. Well, you are a Renaissance man that can multitask. How about that?
Yeah, jack of all trades, right?
Oh, plus caregiver at home. Yeah, you have your hands full. Anyway, I know that warriors like you, no matter what's going on, you still have one eyeball on the market, and I'm looking forward to hearing your review of the board, bro.
That's very true, and you know, my eyeball is firstly on the USD CAD, because, as I've said, in my opinion, that's probably the best looking FX opportunity at the moment. I said it several days ago. I've already built half a position here, and you know, if we break this channel, I'm gonna be full size in it, and I will be looking for a move at least towards 130. So I think this remains one of the best opportunities. This is a 4-hour chart, by the way. So far, a textbook bear flag. Okay, and you know, if for some reason you prefer the knock, here's the USD knock, as you see.
Right shoulder.
Yeah, you can look at this if you want to see it independently, like a pennant. but definitely you can also view it as the right shoulder of a head and shoulders formation here. In any case, a move back towards 840, 840 and change, that's going to be a completely head and shoulders formation. And if we break lower, then we have a nice head and shoulders formation pointing to roughly 8, which is, a decent distance away. So I think both of them nice looking opportunities.
Probably
and
be
I
like
do agree.
$58 crude, Steve, for something like that to happen.
Okay, before we look at this, let's go to crude. Let's go to crude since you mentioned it.
Because I'm going to mute myself. It's the only way.
No, you don't need.
No,
it's
the only way I can control myself here.
No, you don't need to control yourself. I'm always happy to have an active dialogue.
Yeah.
So depends on what's happening here with crude. But the longer we stay near the highs without breaking lower, the higher the likelihood that this is some kind of a triangle or anyhow a horizontal consolidation, as you see, bit by bit, slowly. But the RSI is working out the overbought conditions. And that definitely opens the door for more upside without seeing a real deep lower. Okay, so I might not get the opportunity to get long at better levels the crude, but at least I will be participating in the USD CAD, which is highly correlated. So it's a proxy, let's say, in an extent. Now, on the other hand, I do agree that the USD yen still looks good. This is what we were looking the other day. You want to look at this as a channel. You want to look at this as a pennant. You want to look at this as a wedge. Depends on how you draw it. What doesn't change here is the fact that the rebound higher doesn't seem to be impulsive in any way. So I would expect more weakness here sooner rather than later. We're still holding this trend line support. So as long as we do, there is a chance that we can push towards the 61.8 at 110 and a quarter. We can even push a little bit higher towards 111. But I do think that this should produce some weakness sooner rather than later. Now, having said that, I do have a little bit of a disagreement here with Blake in what part. Buying 130 for a move towards 131 was obviously the right thing to do, and we even saw an overthrow from there. We made it all the way to 130, 150. So loading the boat at 130, and to get that squeeze was the right move. And Blake doesn't hesitate to jump on moves. But I remain a little bit skeptical here because since the beginning, for me, the key level for the cable was the 131 level, confluence of this descending channel and the 200 DMA. So for me to get more bullish on the cable, I would want to see closing the day, and since it's a Friday, that also means closing the week above this 131 level. At the same time, if we have a look at the crosses, this is the pound Aussie. As you see, the pound Aussie, this is a daily chart, by the way. The pound Aussie so far is getting rejected, and we're seeing quite a nice intraday reversal. We were up on the day, rather significantly higher on the day. But so far we've turned around. We're seeing a shooting star here. And where did we get rejected from? From this confluence of resistances, the 78.6 of the last move lower, this ascending channels trend line resistance, and this horizontal support resistance area. So I would be careful here. I think that this is not a place to be buying the pound Aussie, at least not in the short term. Equivalently, going back to the pound Kiwi, we do have more upside potential if we are to fulfill the inverted head and shoulders target. But on the other hand, we're seeing the same kind of thing today. I mean, we're seeing a reversal intraday after hitting this horizontal resistance area. And actually, having to do with the pound Kiwi, we're also threatening with a key bearish reversal. Depends on how we close today. So far, we're now probing levels lower than yesterday's open. And, that's going to be quite a bearish outcomes. So I would be quite careful here as well in the short term. Perhaps we might go down and revisit this broken inverted head and shoulders neckline. It might not even be an inverted head and shoulders formation, because I remind you that one of the problems with head and shoulders formation is that they frequently prove to be triangles, right? So, for example, let me draw on top of this so you understand what I mean. Let's assume that we break down from here. This was never head and shoulders formation. What that would have been was simply a flag. But if you also take into account that, you can easily interpret it as an inverted head and shoulders formation, right? But it might just be a flag or a pennant. So this is something to pay attention to. So if we do break below this inverted head and shoulders formation, this is not anymore the proper interpretation of this formation. But as I said, this was simply a rebound of a rather strong move lower, in which case you would be looking for lower low. As long though as we remain above this inverted head and shoulders formation, looking to be long once again at a retest is a decent risk reward trade. But as I said, I don't like the daily candle that I'm seeing right now. If we go to the 4-hour chart and we have a look at those two charts, in the short-term term scale, you'll see that we have quite nice reversals on the 4-hour chart here and here. So, let's see how we close the day, and, we take it from there. Now, having talked about those, this chart, okay. Another one I want to show on the 4-hour chart to begin with is pound yen. Pound yen is still recovering, quite nicely, but I'm paying close attention to this ascending channel. If we ignore this flash crash wick, you can see that this channel has been working quite nicely. And as you see, once again, we came up to retest this resistance. So, we are slowly making it to the 78.6, but really, I'm not so much convinced about this rebound higher. I was looking at it before, so I wanted to show it. Let me see. Thank you for your kind words. What's my invalidation in USD CAD? Okay, let's go to the USD CAD and tell you what my invalidation will be. Now, if I end up building the whole position and we do break below here, I will move my stop loss above this high. Okay, for the time being, I don't have a stop loss in place because I'm willing to keep adding to USD CAD even if we have a more complex correction and we push higher towards 134.50. But as I said, this all will change if we have a breakdown from this channel, because then I'm going to be tightening. I'm going to actually creating a stop loss and keeping it rather tight, which is going to be above the rebound highs. I might even give it a little bit more space above this 200 simple moving average on the 4-hour chart. So it would be probably I'll place it somewhere at 134.10 initially or something like that. But I first want to see a breakdown from here, in which case I'm going to buy a little bit more. Sorry, I'm going to sell, a little bit more. I'm going to be buying a little bit more CAD. I'm going to be selling a little bit more USD CAD. Doesn't matter how you want to view it. And then I'm going to place my stop loss there. What's my view on Aussie USD? Let's have a look at it. Let's have a look at both the Aussie USD and the Kiwi. Okay, this is the 4-hour chart. That's why it's not so much updated. But what's the case here? And let me go to the daily so you can see it here more clearly. I still view this potentially as a corrective pullback. Okay, so it might be an expanding triangle. We need a little bit more price action to decide. So far, today's candle looks quite nicely. I mean, it might end up being a twisted bottom. So although I'm not long and I wouldn't be looking to be long at the moment, I would have to say that for at least one more push to the upside, I think it looks better than not. Okay, especially if we break this above this trend line resistance, I think that we will probably be seeing at least a move to retest that high roughly at 74 cents. So if I had to do something with the Aussie, I would have to remain constructive, and more so. And then I'm going to go to the other charts I wanted to show since the beginning of the webinar, which is the Aussie Kiwi. More so in the Kiwi itself. I showed that not yesterday, the last day I was in the webinar. I was away for a couple of days due to my wife's illness, but I was showing the Kiwi when it was down and retesting this horizontal support, and I said that, listen, if we hold this horizontal support, I'm going to be looking for a rebound and a move probably towards the 70.5 cents area. And as you see, it's reacting better. And speaking of which, I wanted to show that I think that the recovery in the Aussie Kiwi is likely over because especially if we break below this trend line support, you see this is a little channel here. You see the Kiwi reacting better than the Aussie. So especially if we make it below this trend line support, I think that if you want to be buying one of those two currencies, you should be opting in to go with the Kiwi. If you want to be selling one of those, you should be opting to go with the Aussie, because it looks like there is. Don't forget that the Aussie Kiwi has broken below a multi-year symmetrical triangle, and this was likely only a corrective move to this whole move lower. So I think that we're going to see more weakness probably towards parity. Okay, we have the 161.8% extension of the last rebound, a little bit above parity as well. So previous lows there. So I think quite a nice confluence of supports to be looking for the pair to make it to sooner rather than later. So if you're constructive the Aussie, and that's why you're looking for advice there, I would say that the Kiwi looks better. So probably you should go with that. Now, I had a question yesterday at the last moment, but I had already passed it to Dale. So I want to cover it today. I don't even know if our friend is here. I had a question about Nifty and Nifty banks, and I have to reiterate here that nothing has changed in my opinion. This rebound higher looks corrective to me. So I would expect that the Nifty is going to push lower from here and perhaps create a bigger head and shoulders formation. And something tells me that banks Nifty, I think that's the ticker. Nifty banks. Bank Nifty. Yeah, Bank Nifty. And Bank Nifty has already made the move, as you see. We were looking at this as a potential ascending wedge, and both the RSI and the price action here confirm that likely Bank Nifty has already made a move lower. So I would be very, very careful being long here. Now, let's go to the rest of the indices. Blake already said that you should be very careful being short here, and I agree, because the price action didn't show any follow through. So if today we close near the highs, this is probably consolidation, and there is more upside from here. Nasdaq as well seems to be confirming a breakout from here. The DAX, by the way, I said it yesterday when we were near the lows. DAX is one of the indices that I would easily be long, because DAX actually broke above an inverted head and shoulders formation. And what did it do? It came down, it retested the neckline, the broken neckline support. Yeah.
I remember it. Grega was long, covered the DAX, I don't know, about 3 days ago.
Yeah, they specifically said that I don't know if I would cover it here, because, it might just be a retest,
right.
This inverted head and shoulders formation. And indeed, that's how the market reacted. I mean, not only we retested it, but look at today's price action. Today's price action so far is extremely bullish, because we opened and never moved lower. Since the open, the index is getting bid, continuously. We're currently trading at the highs, and as it seems, there is, very strong bidding interest. So I think that the DAX looks, quite nicely. I mean, Why not? I see no reason why we shouldn't fulfill this inverted head and shoulders formations target, which the low is it's a little bit lower than 11,800. Should be somewhere here, somewhere at this high. So we have more upside potential before we fulfill this target. So I think that if you want to be long one index, I think that the DAX is the one you should be looking as the most appealing one, right? So that's it with it. Gold, yeah, absolutely. Let's have a look. By the way, USD CAD still offered. So as it seems, it might end up breaking down even today. Okay, gold. I was saying about gold and silver that both of them were testing quite important supports. So be careful here because I said specifically because instead of breaking down, we might push higher once again, and that seems so far to be the case. Here is gold, here is silver, both of them getting bid, where you would expect them to get bid on important supports. So I think that keeps the door open for one more high. I would be looking for 1610 for silver, and having to do with gold, I would be looking for why not even the 78.6 at 1320, 1321? Okay. Now, let's have a look at the rest of the metals. Here is platinum also getting bid from this channel support. And here is palladium, which is surprisingly, because palladium has been one of the strongest metals, it's at the lows of the last few days. So platinum might actually have more weakness ahead. And here is copper, which still trades below this triangle, this broken triangle. So there's still the potential for more weakness from there. Definitely, copper doesn't seem to be doing that well. And I would still favor, as long as we don't close above 273 roughly, I would still favor the downside. So I think this is a general overview of the metals. So nothing much has changed here. Let me reiterate here that if you're looking, oops, this is the wrong tab. If you're looking also for some potential upside, emerging, the MSCI emerging index is doing quite nicely. It has broken above this descending channel and above this horizontal resistance as well. And if we take out this high, let me show you, there is another zone here. Let me draw it. You can see it here. If we also take out this zone, the 200 DMA is also converging here. I think we can be looking for more strength following that. Here is also the Shanghai Composite slowly making it to this descending trend line resistance. I think that if we make it above there, we can be talking about a descending wedge, a breakout from the descending wedge, which is also going to be a bullish development. And another one, the large capitalizations shares ETF from China, also 200 DMA converging to this trend line resistance. So all of them will be looking quite constructive once we get the equivalent breakouts, which are not so far away from taking place. Obviously, some kind of a development in an agreement between US and China might provide the required catalyst to see all of those breaking out to the upside and probably then producing some more than decent follow through. Okay, let me see if we have any questions I haven't covered already. By the way, you do have an interview today, Coach, right?
Yes, buddy.
I see
Henrik
that we're already.
Seberg.
Okay, is he in the house? Because
Yes, he is.
I see that. Okay, perfect. So you want to start the interview?
Yeah, sure. He's been hanging out with us during the session. So, Steve, have a great weekend.
You too, Coach.
I hope that your wife feels better. I Skyped you that breathing treatments helped me when I had pneumonia. Get a nebulizer.
I saw it, but I was very busy to answer. I saw it. I appreciate it. Thank you, Coach.
Okay, buddy. Henrik, welcome back to Face. I'm making you the presenter. and looking forward to seeing what's going on with your narrative of deflation here. So, how are you, Henrik?
I'm good, thank you, Dale. How are you?
Welcome back, my trading warrior brother. It looks like you put together some type of PowerPoint to cover different markets. So take it away. I think the last time I sent you a direct message, gold was trading around 1,300. You thought that was going to be a pretty significant barrier. So why don't you just go through what your views are, and I'll probably have some questions for you as you go through it.
Sure, and thanks for having me on. So, you know, I look at the longer term perspectives. I've just been listening in here on great people looking on the more short term perspective, but what I do is more on the longer term.
Okay.
So I think I want to start out there again, like a little what I did last time, and I think it was in August where I think we discussed a little about oil and also equities and things like that, and not too much has changed for me, which is good. Then I don't need to change my slides too much. I can do an update on things, and then but I think we talked about the Kondratyev's winter last time, and I want to keep iterating this because this is how I see things. I always start out by looking at the bigger picture, understanding where are we in before looking into the charts, where are we in the very big picture, because that will tell us something about the mega trends, about the things that are really influential when it comes to our trading, which we might not identify during the on a daily basis, but on a longer term perspectives, they will be driving a lot of the price action.
Can I ask you something? Because there are so many different Elliott Wave practitioners, Henrik, that have.
Sure.
Everyone has a lot of people have different counts. I know everyone always has an alternate count. Do you believe that your view on where we are in economic winter influences what you see as far as wave counts to make it fit? And are you willing, when the structure changes, to think that we could have a break in the winter for a period of time? I'm just curious if your overall view of deflation at times influences your wave counts.
Well, it does. I mean, that's how my whole model has been constructed.
That's fine.
I mean, that's the way it has been constructed. So it starts by understanding on a very big picture, where are we in? Are we in the autumn? Are we in the winter? Where are we? So for quite some time we will be in the winter, and we'll still be there for quite a number of years. Sorry.
If I may, sorry, Henrik, I also have a question. I'm not very familiar with Kondratyev's cycle. I know that it's a 54-year cycle, if I remember right.
So 70.
You can't put an exact year to it. I mean, it can be. There is a time span to it. So, but it's based on swings over the long-term perspective, and 54 would be too precise.
In the books, whenever I've come across it, they describe it as a 54-year cycle. So that created my question, actually, that if it's a 54-year cycle that I remember, how come only 1/4 of it, the winter, is at 20, potentially, from what I see here you have in the chart, 2000 to 2022, so that's 22 years, which is almost half of what I had in mind. That was the total length of the cycle.
But I haven't the 54 years. I don't know which book that comes from. I've seen 70, I've seen 80, I've seen a lot of things here, and I don't think we should
70.
put too much. Yeah, I don't think we should put too much emphasis on the particular number for the amount of years. What is important is the different characteristics that you have during the winter. So we cannot consider it as something which is just going to last for a short amount of time. What is the main characteristic during the winter is the buildup of debt and the problem that creates in the long-term perspective, and that the winter is not going to end before you see a resolution to the whole debt level. And that's why everybody tells me, well, we're on the other side of this. No, we're not. I don't think so. We are in the middle of the winter. We'll have one more deflationary bust caused by the huge amount of debt, and we're going to see other deflationary events unfold during that. We're going to see another currency, not another currency crisis, currency crisis unfolding to other areas than what we have today. I don't think we have seen the yields yet as at the extreme lows that we need to see it. I'm a bull on the TLT and other safe haven bonds. We haven't seen the pension fund crisis that we're going to experience also. And you remember 2 years back, I predicted trade war, and people told me I was, crazy. I'm saying we're going to have a major pension fund crisis as well.
You did, Henrik.
Yeah, sorry.
You did.
Yeah.
I'm just verifying. I remember.
And then we're going to see also, as I said, pension fund crisis. We're going to see eventually also the run from paper money to gold and currency death. I mean, that's not too difficult to think of if we look at what's unfortunately happened in different places in the world, like Venezuela and places. But it will also come to more developed markets as I see it. And then we're going to see when we get to the end of the winter, that will be at the moment when politicians finally get their acts together and they understand that they can never drive up growth rates in the world by QE or whatever, or driving down interest rates. I mean, monetary policy.
What's your theory for having debt at record low levels? Would it be by default that occurs? Because just retiring all this debt, you would think would take decades. So how does that occur? Debt at record lows, bankruptcies, defaults.
Defaults, and you'll see also inflation running at higher levels at some point. Not now, not at this point. But at some point, then what they will, and that's why I expect also us to see some stagflation before the winter has ended. So so when it says deflation here, it's the overall picture, But we're going to see some stagflation, which is also going to inflate away a lot of some of the debt around the world. But this is how I perceive things, and I think the winter is going to last until at least a couple of more years, to 22, 25, something like that. Depends on how fast the politicians will get their acts together, because very much it's about the debt levels. And I'm seeing things, and I get into that now, where we can actually see that the whole debt situation is going to unfold. That the next part of the crisis is not a financial. It will be a financial crisis as well, but it's not going to be a financial crisis and a sovereign debt crisis. And that is where the politicians will start to act, as I see it. But let's should we move on, Dale? Anything else?
Sure, go ahead. Yeah, go ahead.
So these are the main conclusions. Like Churchill always said, first you tell you what you're going to tell people, and then you tell it, and then you're going to sum it up. And this is the sum up of it, by the beginning. We've not seen the end of Kondratyev's winter. We'll have one more deflationary bust, as I see it. We'll see King Dollar will reign for, as I see it, coming months. I've heard people talking about years. I'm not too sure about that. We'll see all currencies will decline versus the dollar for the coming months. Oil, copper, precious metals, and commodities will drop a lot. And we'll see Europe be the epicenter of the crisis. And I think, I'm pretty sure that we have seen a top in equities, and we have a major bear market on our hands, and we'll see a major drop soon in also U.S. equities. We'll also at some point see, of course, the central banks could react to deflation, and we will see that they will be able to end the deflationary phase, and it will create some kind of bounce in the market, but that will only, kick us into some a stagflationary scenario.
Any best guess as to what it will take for like the Fed to flip? Is it going to be stock market dependent, economic numbers dependent, and do you have like any kind of time window when you think that central banks will begin to react to deflation, which is mainly being driven right now by our central bank in the U.S.?
So I do think I have some kind of timetable to it, but as we also, we just talked last time around the euro dollar, which I still think is going to drop a lot. I thought it was going to, unfold a little quicker than what has been happening. I do think something, changed yesterday, to be honest, but the time window will actually have to do with the whole perspective, also why inflation and the charts that supports that. And if I could go through that, then I'll get into the perspective of how long I think it's going to last. So if we look at this, why deflation? Why do I think we're going to see deflation? Well, it starts with me looking at charts and recognizing different patterns. And one of the patterns that I see in oil is this one. It's an ending diagonal, which has 5 faces. We have 1, 2, 3, 4, 5, and we have an ABC for all the faces in the diagonal. And it'll take us down to, in this case, it'll be a C wave, which when we look at oil, because that's exactly what we have here. We have the 1, 2, 3, 4, and then we're going to see phase 5, or wave 5, which will take us below. Very often it'll shoot below the trend line. That's why my call has been consistently since, also as we spoke in August. I think we can rewind and take a look at that. I had a target below 23. I think people at that time told me it was a little crazy call. I stand by it because I think we're going to.
It was a 3 drive to a top formation, buddy.
Yeah,
that was a very good call. But yeah, nice call, bro.
Yeah. And there so I think we're going to see, this full ending diagonal here going to end up in a retest of the whole area we had back in early 2000. So below 23 for oil. And obviously, a drop like this is going to be deflationary. If we look at it from 53 to below 23, that's a deflationary move. And that's going to cause a lot of pressure on prices. So this is the kind of structure I see. Okay. If we look at copper, I look at it like this. So what we have is we have top in 2006. Then we have an A, B, C taking us down to wave A. And we have an A, B, C up to what is called an irregular correctional move, because we can see that the B wave moves higher than what we ended up in here. And then we're going to, very often, we're going to take us down to 127.2 applied from the top of wave B. And that takes me down to around 100 for copper here in this index here that I use, the future. So
looks like you have a lot of lows coming in the end of this year, early next year.
Yeah, exactly.
Okay.
Exactly.
All right.
And that's what I'm thinking. And that's exactly what I'm thinking. So I'm seeing this, going to develop quite quick soon, because we have a 1, we have a 2, maybe a potential little high here. This was prepared last week or on Sunday. So I think we're going to see some fast development really soon on copper, and it's going to be, quite consistent here. And this is like with oil, as we just saw before, something that will scare the Fed, of course, because then the numbers are starting to be really, really bad when it comes to, price development and things. So this is also going to cause a lot of problems for emerging markets and in Europe and places.
Do you think the Fed is on hold for the rest of the year, Henrik? They're pricing in maybe 1 now in December, but if prices are falling the way you're anticipating into the end of the year, they're sure as heck not going to tighten in December. If they're going to do it, they need to do it sooner, don't you think?
Yeah, let's remember what happened in 2007-9 crisis. So Fed actually lowered rates the first time in September 2007. Okay. And we still had a deflationary fallout until October 2008. So the things that they have done already with the QT and with rate hikes and everything is already painting the picture right now. So could they be hiking 1 more time? Sure. 2 more times? Sure. Depending on how stubborn or how steadfast they will be. But we don't necessarily need that. I mean, just standing where we are now is creating a lot of stress in the markets, and there's going to be a shortage of US dollars, and that's what's going to cause the deflationary drop that I'm seeing.
Okay, buddy. Thank you.
If we look then also in another, so I'm looking at different deflationary gauges here, and the last one that I'm looking at is also the Aussie dollar, and I think what we see here is also the same kind of thing. We have an A, we have a B, and then we're going to see what another target zone could be around the 161 here for the C wave. We had something which is a consolidation here. We broke down, and now we are on a long-term trend. We're just bouncing around here, and what I still think we're going to see is a drop down here, and the next level will be around, again, the 2000 level here for the deflationary bust. And this is quite, again, extraordinary. I again, like what I called in oil, and I said it's going to be a huge drop. The same thing is here. It's going to be a big drop for the Aussie dollar, and this is a very deflationary move. It has to do with China. It has to do with the whole trade situation in the world. We're going to see some kind of, all of a sudden break to the growth in the world, and it's going to create this kind of developments.
Okay.
So, again, coming back to your question, if I'm seeing some kind of time perspective, yes, I think we're going to see this develop into late 2019, and then you'll have the financial markets will maybe sniff it up a little sooner that things are going to change, and you're going to have the real economy, slump a little longer than that. But we also have to remember that when I'm saying that we're going to have a deflationary phase first, and then we're going to see a stagflationary phase, this also plays together with this, because when we see that commodities will bottom out around late 2019 or early 2020, that's when price levels, and that's when we get into the whole new inflationary scenario. That's when I see that the secular inflation will start bottoming out. And that's when central banks will start getting a real surprise to them when they say, oh, where did the inflation go? We have been printing all this money and we could do that without inflation showing up. Well, that's because we've been in the winter. And when we start to get into the early spring, real times come back to the central banks, and printing money will not be something you can do during this, the contractive spring. So this is something, we have to bear in mind as well when we think of the central banks, and they will be not as omnipotent as they have been trying.
So we only have about a year and a half left of winter.
Sorry. No, actually, I think it can last for some more years. It depends on when as soon as as I said, the politician gets their act together. Because what can happen during the winter is that you can have a stagflationary period in the winter.
Okay.
Right. And that's probably what we're going to see for some part of the winter.
Okay.
As I said, we got an asymmetrical situation in Europe. We got now we know the ECB have stopped their purchases, and we've seen a topping pattern here in the Italian 10 years, and what we have a bullish pattern in the German there's a bonds, 10-year bonds, and to me that's very clear what's going to happen. We're going to see the flight to safety. So Germany, the Nordic countries, Netherlands, and other places will be considered safe places and safe havens, and we will have the again, unfortunately, a situation where the southern part of Europe is going to be struggling, and we're going to see rising rates there, and probably also some difficulties and that's probably also why we could see some of the sovereign debt crisis play out in Europe, unfortunately.
Okay, the sovereign debt crisis won't be in Germany. It'll be in Southern Europe that has more fiscal problems, and Germany is kind of the safe haven, flight to quality for Europe.
That's what I see. I don't think it was going to be any.
So will Spain and France be in the camp of Italy?
Very good question.
France,
yes,
France is kind of unwinding, and it's
exactly.
It's bigger than Italy.
Exactly. We could hope it's not going to look to be that. But I don't know. I haven't checked the charts on France, to be honest.
Okay,
but we could definitely have that. And the situation is, and this is why I put in a tweet this morning also. As long as the euro is misconstructed as it is, we will have this crisis re-emerging in Europe, because you will have Germany, which consistently will have, if you look in a two country kind of environment. So Germany will consistently have higher productivity level increases per year than Italy or that needs a valve. You need some kind of valve, or you'll have a crisis, returning, and that needs to be constructed at some point if they want the euro to survive.
Okay, je ne sais pas.
And what you probably also remember, I've been bullish the dollar, and I'm still bullish the dollar.
Okay, what do you think of today's action? I know you're not short term, but I actually thought we had a breakdown in euro, and here it is up in the bear's face today. So it's curious.
Dead cat bounce. I mean,
okay.
What we saw yesterday, I think it was some serious breakout we saw there, and I'm just curious to get back to the charts to see if we get a follow through today later on.
None
in trading.
Not yet.
Not yet.
Yeah. Okay.
But let's look. Let's see a little later. Yeah. But I think I don't buy into this. That the dollar is going to weaken or something. This is going to be a very, very strong bull for the coming weeks and months, and King Dollar will take no prisoners here. So it's about not being short the dollar here, as I see it.
Okay, and you're looking for 107.
107, and probably also like here again, because of the structure of it, we can have an overshooting of the trend line, so it'll be 107, 110. And what I think is going to happen there is simply that the Fed will re-enter, and that, also back to the timing perspective, that will be the moment where the Fed cannot, look above, or that the whole world will be in a lot of trouble, and the shortage of dollars is something they'll have to address, because the U.S. will also be hit by the slowdown, and to a larger degree. So yes, at some point they will have to.
Multinational that has to export with a 90-cent euro. Isn't that your target?
Yes, it is, and I think it's right here. Yeah, it is. So that also, that's the same as been all the time. There are many indicators from this chart that 0.9 area is important, and we're going to revisit that again. It's the area from 2001. If you just think of that with oil and with copper and the rest of it, it's like we've come full circle. It's like the whole phase of blowing up the asset prices and things will come full circle as they're being as we get into the later phase of the contractive winter. But if you look at this, there are if you look at the two vertical lines there, which indicate that if you have a topping pattern and you break down as we did in 2014, you will have a target around 0.9. We have the trend lines, we have the count, we have got a lot of things. We also have the ABC correction, the green ABC, which also indicating this area. So 0.9 is something we're going to reach. I think, again, it's something we're going to reach during 2019. I was more optimistic, thought it was going to develop much quicker last year, but it didn't. But the consolidation we're seeing now has been long, and it's probably going to point to a very strong move down when we start to see that unfold. So I'll stick to my perspectives here and see and say call for the 0.9 area, maybe lower, maybe even lower. Maybe down to
that was the V, the white C and the green C. Is that what it means? Even potentially lower levels?
No, that's because you have the count. You have 1, 2, 3, 4, 5, and you have the wave 4 out here. Then green 5, and then you have an A, B, and then you have a C, which develops in 5 phases down. So this is the C here, and the A, B, and C will be the. Okay. So, but it means it can also undershoot this trend line here, which will be likely, and we can go down as low as 0.83 for the euro, as I see it also.
Okay. That would be near that's a historic low.
Yeah.
Down there in 2000. Okay.
And again, with the crisis in Europe, originating in Europe, and I mean that's very much in the cards. And then we talk, if you look at the dollar, I mean, against all your currencies, what we see here is a monthly for the dollar yen, and we've seen a decline in dollar yen for for many years, and what we're going to see is simply just in a very long perspective, it is simply just a correction on the move down, but it's going to be quite a correction, and I think it will take us to 154-ish area, which is simply given by an A move up. Then we've seen a triangle here, which is an A, B, C, D, E. We had the undershooting of the trend line, which is very characteristical for an E move. Then we're going to see, of course, we can have some.
The flash crash put in the low. We could correct back into that. Let me ask you this: how do you square 154 yen with being bullish bonds?
That's because you're saying that that yen will be a safe haven, yeah, but if you look at that in a very long perspective, you'll see that's not really the case. It's something, it's a paradigm that some people start to, but you've seen many times just after, I think it was in 2001 to 3 timeline, you will see that that's not really the case. So I don't live by these paradigms, to be honest.
Correlations work till they stop. So a lot of people are going to be going, oh, the bonds are going down. Why isn't the bonds are going up, yields are going down? Why isn't U.S. dollar yen going down? For a while, that could, a lot of people are going to say, that's a correlation. Okay.
But I don't buy into, that, and you will see that if you look at it, it's very, very simple to observe that there have been long periods of time where these kind of correlations haven't worked, and I think it's just going to be another one. And the thing is, I look more at the structures of the development of price development than I look to all the correlations that are not really holding up. And this is clearly B wave that we got here. I mean, it couldn't be hardly be clearer with a triangle like this. It's a triangle or it's a wave 4, and I hardly can see it's a wave 4. So it's a B wave, and I think.
So then the correlation will break down between bonds and U.S. dollar yen, but I'm assuming that this move in the yen is going to be the other correlation. Maybe it doesn't break down. Is going to be pressure on gold with U.S. dollar yen going up. Will that correlation hold?
Yeah, I think so.
How do we know which one to choose?
Well, I mean, that's where I look to the structures of the graphs. I have a multi-market model which has been calibrated between the different markets, so that you will have, if you look at it from an inflationary deflationary kind of understanding, well, then it's calibrated across, and there are some correlations that will be broken up at times, which is also what we have seen, but there are also some that will hold. So that's how I see it.
Okay.
I got a few more charts. I got for the S&P, and what I think here is important. We talked about last time in August that we would see the high at some point. I think we have. My forecast to this is that we are now in a very, very big. This is a major top, wave 5 here. We're going to see a deflationary move, which is the whole deflationary story I've just been talking about here, taking us down to around 1900 for the S&P. And I know, so people say, nah, but we're bouncing here and we might see new highs. I don't believe in that. I think we're in a new regime, economic regime. We're seeing net liquidity in the world going down or being negative. And we are in a kind of a 2008 environment, Q1, Q3, 2008, where the net liquidity is decreasing, and that's really going to cause a lot of problems. So I see the A down in a very long perspective, because that's what you will see. A B up after Fed react, and then we're probably going to see the next phase will be a stagflationary phase. But let's talk about that when we get back on in 2020 or 21. It'll take a little time.
Okay.
But the deflationary part is going to unfold until at least late this year, I think. And 1900 will be the area where I'll start to looking for a bounce from the wave A.
And it'll feel terrible, but I mean, compared to the crisis in 2008, 9, and 2000, it's still not really terrible levels. I mean, 1500 was a double top breakout. You think eventually that's where we'll get to after a big bounce, but it's not like some of the super bears, Henrik, are talking, us taking out the 09 lows and stuff.
Well, I could have drawn that in as well. I'm not sure about that. We'll have to look at it when we get to there. But I'm quite sure that 1500 as a minimum is what we're going to get to by the end of the winter, of the contracting winter.
So some Ellioticians are saying that this is not 5 of 5, it's 5 of 3. We get a pullback for 4 and then new highs.
Yeah, and I think as you said, you have got many counts out there, and I think it's about pulling all the pieces together, not doing counts on just a single chart. If you do a count on a single chart, or even worse for a time span of 100 days or something like that, it's not credible. Simply, you need to do it in a very long time perspective. You need to have the multi-market perspective, inter-market perspective. If you do not have that, and also pair it up with understanding of macros, because if you don't do that, I don't think Elliott waves will allow you to make a lot of mistakes, and a C wave can be mistaken for an impulse wave up and things like that. So, it's very difficult to call it if you do like that. So I don't trust all that. What I see are some very good ones that I look to, but I think it's some of them are mistaken, to be honest.
Okay.
We
all are mistaken at times, aren't we?
Oh yeah, we are definitely.
Okay.
DAX, very, very tough on the DAX and then on Europe. I think we're going to see, and that's also what the bigger perspective calls for, that after this major downturn that I think we're going to see we're going to see a significant bottom in Europe. So when everything has been sorted out by Kondratiev's end of Kondratiev's winter, Europe will be the place to invest. But I would not invest in Europe at these times. I think it'll be a very bad place to be. So So that's going to be causing a lot of trouble, unfortunately, and a lot of problems like what we see already with yellow vest and things like that, where people will be scrambling or will be demonstrating against the establishment, which you can understand.
Do you think things will be better in the U.S. As far as social unrest during this economic winter? You live where again, Henrik?
Denmark, Copenhagen.
Okay, so you feel comfortable there with what might happen in Europe as far as it being a okay place to ride the storm out?
Yeah, I think Denmark and the northern countries will be okay. The Nordic countries will be okay. And I don't want to be mega bear. I'm just saying that we can see already things developing. Yeah, but it's when you start to see, if you look at things in Italy, for instance, where you have youth employment at the levels that you've had for so many years, and this has been through the good times.
Yeah, good point.
That's terrible to see. And if I was in that situation, I know what I would have done. If I had to live with my parents at age of 35 and couldn't get a job, I would also be revolting at some point. So I think it's terrible for what the euro is doing to Europe these days.
Yeah, I don't know why they ever called 2008, 2009 the Great Recession, because it really wasn't great for anybody except the banks.
Exactly, except for the banks and for panic around there. But this is going to be, as we said, the sovereign debt crisis, I think, and it's going to be felt across many countries, unfortunately. So what else do we have?
Gold. Before you get to gold, can we have a sovereign debt crisis with negative interest rates in Europe?
Sure. I think
what's a crisis then? The bonds are being bought, right, for safety. I would think the crisis would be not being able to sell bonds, sovereign debt, not being able to sell it.
It depends on which country you're looking at. I think look at Italy the coming months and see how much bid there'll be at their bond auction.
Okay.
I mean, wasn't that what we saw in the topping pattern for the bonds? I think you'll put your money where the safety is the greatest, and you'll probably put it into. I mean, Denmark has zero, foreign debt, zero, and we have a balanced budget, and we have that every year, and we have a welfare state which is quite expensive. We pay a lot of tax, but we got a social contract which is intact. And so people will be investing here, and you can get on real estate bonds. You can get a good mortgage bonds, it's called. Sorry, you can get a good yield. So why not? And that's why I think you'll see a divergence between where you look to whether it's Southern Europe or Northern Europe.
You need a roommate?
Yeah, sure. You can come look at it anytime.
All right, buddy.
I'm not sure my wife will agree though, but anyway, you can come.
Well, I'll be like your grandfather. So,
great.
Okay, let's wrap it with gold.
I got something I go. And first, I want to tell everybody who thinks I'm the greatest bear that I'm actually the greatest bull when it comes to gold. But it's just a matter of timing. And if you look at this in constant US dollars, 90-20 US dollars, I think we're going to. We normally see during the winter and during the summer phase that by the end of these, that gold reaches an absolute peak, and it will probably be in a major bubble at that time. But we are still 4 to 6 years away from the end of the winter, and that's why I think we're going to see a bottom first in gold, and I'll just come back to that on the next page, and then a very, very significant top at lasting the rally lasting a couple of years or 3 to 4 years, and even with stagflation, that will be the perfect environment for gold to develop. So that's what I see.
Will silver outperform or lag? Just your gut.
Outperform.
Okay.
By far.
Poor man's gold. So because we've already seen a little change of trend in the gold silver ratio. That's why I was asking you.
Yeah. Again, these are the All right. And what we can look at and why I'm still a bear on gold is that I understand all the narrative that's coming out, but also I think it's simply a misunderstanding. And if you look at the Q1, Q3 scenario back in 2008, where gold and S&P dropped together. I mean, people telling you when you get a crisis, people move their money out of stocks and into gold. Well, that's not what we see. We see that we have to understand that there are different regimes, and one of the regimes is a deflationary regime where liquidity is everything. And really, what gold does in that phase is really living up to its responsibility, which is provide liquidity by when you know the shit hits the fan, and that's what it does when central banks has to sell it off to be able to actually get the liquidity for, you know, in the shortage of dollars.
You know,
So-
maybe a recent example of that was a lot of people suspected on the washout to 1160 was when the Turkish lira was in crisis, and possibly it was the Central Bank of Turkey that dumped a lot of gold when we're down $40 that day. So you're right. During the liquidity crisis, people sell the kitchen sink to raise cash, and
Exactly.
gold will fall victim to it. So
technically, we are on this. Sorry,
go ahead. No, go ahead.
Technically, I look at this as also an ABC pattern, and that is the correctional. We are in a major bull market for gold, which started in 1999, and now we are in an ABC correctional phase where we are right at the wave 2. I think, you know, the yellow spot there in wave C, and the next phase down will be where, you know, the wave 3, and I'll just show it here how it looks. So we had the top in 2011. We have an A with 5 phases down. We have an A, B, C. Then we had a 1, a 2, and now we're just hitting, you know, back testing the small triangle. And the next thing we're going to see is a very strong move down, which is, you know, equally strong as what we saw back in 2012 and 13, and equally strong to what we saw back in 2008. You know, the rate of the decline. So, and it's not, again, as you said, you sell this, you know, everything you need to in order to get your you know, to get the liquidity. So that's what we're probably going to see. Will that be a good time to buy gold when we get there? Yes, it will. And that's, you know, back at the 750 or 825 area. That's where I would go really long.
Any view on miners? Do you follow them, Henrik? Because, you know, they've been underperforming gold for quite some time. You know, they have costs of production and energy costs and debt. And I think most likely only the bluest of the blue are going to be able to survive. You know, gold being 400 under production costs at the end of the year.
I completely agree, and obviously many miners will be a bargain at these level, and they will be. I hear these about, you know, they will not be. You can see gold, you know, fall below production cost levels of production cost, which is not true, because you have stock and you have flow of gold, and when stock goes, you know, starts to sell off as central banks need liquidity, you can have, you know, significantly below production costs. So you will see some of them struggle, but these are one of the things that I keep really, really close to myself. There are some, you know, fantastic opportunities when it comes to miners, and I picked a few out that I want to invest in at some point.
Okay, well, I'll pay you $5 to find out. Anyway, no, I wanted to, let me ask you this. The biggest hoarders of gold over the last several years has been China and Russia.
Yep.
And I think Iran. So I could see how Russia might be forced to sell gold if you're right about the ending diagonal in crude, right? So crude prices drop, they're going to probably have to sell gold. China is the largest hoarder. You really think the PBOC is going to dump gold during this scenario to what, protect the yuan from falling too much, or what?
No, I'm not sure it's going to be China or Russia that are going to be to force the price down. I think it'll be some of the countries which will be forced to do it as part of a debt, sovereign debt crisis.
Okay,
so
like Italy, and
it's going to Turkey. It could be other places. You know, there could be places there where they will have to do it simply. So I think that will force. And I don't think that, you know, the bottom is gold. In gold will not be something that lasts for many days or weeks or something. It'll be a spike. With it, days, of course, but not weeks or months. I mean, it's going to be really quick. And you can also look, if you look at it from a technical perspective, you can see could potentially look like a major bull flag that we're going to. And I do have, you know, very high levels for gold to move to when this bottom is in.
Another great presentation by Henrik Zeberg. Okay, let's go to your conclusions here, partner.
Yeah, but that's just back to what I said, you know. So winter not over, King Doll, and all that what we just talked about.
I tell you what, I put my gloves and earmuffs on after doing this interview. I'm freezing in here. Anyway,
take care, man.
Okay, so really, thank you so much, Henrik, for coming back, and Looks like your narrative, it's been a little delay with this bounce in gold from 1160 and euro moving sideways, and really appreciate your conviction, right or wrong. It's great to talk to someone who believes in their work to put skin in the game on that, on those ideas. So I hope 2019 is a great year for you. Looks like being long dollars and short the world is the Henrik Zeberg financial plan.
That sounds like it, yeah. Thank you very much, Dale.
All right, well, good hunting, my trading warrior brother. Thanks again for being with us and cheering us up on a Friday into the weekend. All right,
you.
But you know
Cheers.
what? Better to know, or at least think about these things, than to have your head in the sand. So, really, I enjoyed our conversation today, Henrik. Have a great
Yes,
weekend,
same.
buddy.
Thank you.
All right.
Cheers. Bye.
Yeah. Okay, everyone. You're welcome. Tom, are you still there, Henrik? I had a question.
Yes, I'm here.
Any view on Bitcoin from the
Yeah.
audience?
Yeah, I do. I think there might, what I see technically is that Bitcoin is not dropping like we would expect if it was a real crash. What I see is something that is correcting. However, when you see something that is, flying to the moon like what we saw, it is something that is going to correct very deeply. So I had the around 2000 target for some time where I would be looking at it. But I think that target could even, maybe the entry target could be around 100 or something like that. There are different places where I would start looking at it, because obviously if there will be a runaway from paper currencies, Bitcoin might, shine again. I'm not sure it will, but it could.
Okay. Thanks for that, buddy. And that's a wrap for us here in Face. Everyone have a great weekend. Remember, don't just count your pips, count your blessings. Adios. See everyone Monday. Thanks again, Henrik. The video will be out in a couple hours.